Good morning, everyone, and welcome to NYSE Live. I'm Kristen Scholler here in studio at the Stock Exchange. We do see stocks fractionally lower this morning as Wall Street adjusts to President Donald Trump's agenda, his second year in office during his second term. Defense stocks like NYSE-listed Northrop Grumman and Lockheed Martin each gained about 7% pre-market after Trump called for a $1.5 trillion defense budget in 2027. Now, as investors build their positions in this new year, technology shares remain in demand, and it's a story that we'll cover extensively over the course of the next hour. Let's take a look at what's on tap in today's show. CES 2026 is making plenty of noise in Las Vegas this week, and it's not only artificial intelligence that's top of mind. The CEO of Roboto AI will tell me why the robotics industry's evolution over the past year has been, quote, seismic, end quote. At 9:30 a.m. Eastern, Wedbush Securities is set to ring the opening bell to celebrate the Dan Ives Wedbush AI Revolution ETF. Ives, along with Cullen Rogers, CIO of Wedbush Fund Advisors, will join me on the trading floor to talk more about it. And this afternoon, NYSE-listed Babcock & Wilcox, also known as B&W for short, is set to ring the closing bell. But before they do, his chair and CEO Kenny Young is going to join me here in studio to break down his company's AI data center push and a new partnership to boost its goals. Well, let's start with the markets, as we always do on NYSE Live. It is the first full trading week of 2026, and we want to bring in Frank Capillari, founder and president at Cap Thesis, with more. Frank, good morning.
Good morning, Kristen. Thanks a lot for having me here.
Yes, Happy New Year to you. How is 2026 looking?
So far, so good. About a week in. But I like to look at this sometimes not worrying about the calendar. It's about what the charts look like. And I'm always looking to see if there's any bullish structures for the S&P 500. And there currently is. As we know, the S&P's been making new highs marginally. More importantly, it's kind of pushed above that last late October high from last year. So some people may think this is extended, but if you look at it from that angle, we're kind of net flat over 3 months. And what happened 3 months ago is when had that final push after earnings season when the large cap growth names really spiked, and then that's where the air came out of the market a bit. So I think looking at it from that angle, it's a better setup now at kind of the same price levels as we were 3 months ago when it was extended.
Okay, so is that good momentum as we watch some of these January seasonals that can be at play and sometimes do portend what's to come in the markets?
They certainly do. One of the things that's very interesting is that the breadth has been improving, right? So there's some technology names that look good, but recently there's been a lot more leadership from financials, industrials, healthcare. And so what really gives the credence to a bull market extending? Rotation, right? Because we can't have the largest names lead at all times. Very important to see when those take a break and the other sectors step up. And that's really been the name of the game since the comeback started in April of last year.
Where are you seeing that rotation to?
Well, financials is a very interesting one. Now, XLF has been making new highs, and a lot of people think of banks during that when we look at the financials, but there's much more than that. There's brokerage firms in there, asset managers, of course, also some insurance companies. And just 2 days ago, all 76 components of the XLF financial ETF rose. So this gives you an idea of how strong it's been and making new all-time highs. And if you look at the chart of the XLF going back 10 years, you can see there's multiple times when not only it's made new highs, but it's breaking out from bullish patterns and having extensions that lasted months, sometimes years. So from that perspective, this current breakout could be just the fifth one of that, and I would look for a continuation of that pattern.
Well, let's talk about technology names, because certainly they worked in 2025. There was some profit taking at the end of the year, but in the early days of 2026, it seems like there still is demand, especially for some of these AI plays.
That's true, and of course that's been driving everything. But it's interesting too, if you look at some of the Mag 7 stocks, it's really been a rotation within those 7 names as well. So recently Apple's come in a bit, so has Tesla, but at the same time you see some very good advances from Google, Alphabet, trying to break out from its own pattern. And I was just talking about this in a note to clients today. It was the first time I recommended it last year in April. In May, I got a little nervous because we're still kind of near the lows and had a target of 192. Look at that chart now. It hit that and then extended higher 6 or 7 months later. So that's why I always talk about the need to see bullish patterns work, because not only can you have kind of a tactical pattern being hit, but it can lend itself to much longer uptrends going forward.
So with a broadening rally, the fact that we haven't moved much over a course of a 3-month basis, if you look at the charts, how much more room do you think there is to the upside?
Well, for the S&P 500 itself, I have a target right now of 7240. That's just measuring the move that we've had from the trading range that formed from that October high, right? And so from that point, readjust once more. And so it's an ebb and flow. So even though we see these bullish patterns working, anytime that rubber band kind of gets extended short term, there's going to be a pullback. And that's important because anytime you have a consolidation that tends to resolve to the downside, what does that tell you? We're breaking down, there's going to be bearish patterns that work. That is one thing that has not happened. There's been pauses along the way where we have those resolutions to the upside over and over again. It kind of reinvigorates the feeling for buyers to come in more. And so if and when we hit that target, seeing how that pullback results afterward is going to be very significant.
Energy, of course, is a sector that's been in focus, especially here in this new year as well. What are you watching in the energy space?
Well, the OIH, Oil Services ETF, again, extremely important right now, and it had one of its biggest two-day moves, in years after the Venezuela news. But the interesting part about that is that move started on Friday before the news and continued on Monday. If you look at that chart over the last number of months, it still doesn't look too much different. It's been in an uptrend where you can put like a channel around that, and it keeps on bumping up against a higher part of that. So the thing with energy is that we've seen spurts of demand. We haven't seen is investors willing to buy at higher prices. So right now, I see it more as a trading vehicle than anything else. We'll see if that changes going forward.
Interesting. Okay, so it's going to be a good 2026, it looks like, but could volatility still be in store?
Of course, we have to expect that, right? In fact, when we're making new highs in October, one of the things we're telling clients is that, to eventually get an upside target, what do you need? You need more to volatility to build that kind of structure. So eventually we'll need that to happen again.
Right.
Whether that's a 10% correction, something more. I try not to make predictions on that, but we'll see it again in the charts. We'll see momentum maybe losing steam, and again, some of those structures then rolling over potentially, and that's how we'll get an idea if that's coming or not.
Okay, so earnings, of course, will factor into this, right? In a few weeks' time, we'll be getting some of these earnings coming up here. The Mag 7 stocks, what's in focus for them?
Well, they usually have a high hurdle to go above. And you look at some of these names, like for instance, Meta, right? It gapped up, gapped down the past two times, and it's kind of been in no man's land for a while. Now, if I'm looking at that chart over, say, the last 3 or 4 weeks, it's been trying to break above, a bullish pattern. But I think investors are just hesitant. They want to see a little bit more what it can do. And I think, with all those, it's really about, the positioning as you get to that spot. So it's not really going to be for a few weeks before they report. Very interested to see how banks do, the big banks, just because, as we mentioned,
yes,
financials have been on fire. Most of them are at new all-time highs. How much is priced into this?
Yeah.
So I think that's going to be obviously a big one to look at.
And of course, they'll start their earnings season typically, as they always do, right?
Yes, next week.
Okay, Frank, anything more to leave our viewers with before we have to let you go?
Well, see, trust the trend until it ends.
Yeah, trust the trend. I like that. Frank Capillari, founder and president at Cap Thesis, joining me here as we get 2026 started on Wall Street. Frank, thanks again.
Thanks, Kristen.
Yeah. All right, everyone, stay with us because up next, NYSE-listed Babcock & Wilcox has been delivering reliable and secure power for more than 150 years. Its CEO will tell us how it is reaching new levels thanks to AI on the other side of this break. Frank?
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. NYSE-listed Babcock & Wilcox is set to ring the closing bell this afternoon. But before that, they made some news. This morning, the company announcing that it selected Siemens Energy to provide steam turbine generator sets for its project to deliver 1 gigawatt of power for a digital AI factory. Joining me now with more is Kenny Young, Babcock & Wilcox's chairman and CEO. Kenny, welcome.
Thank you. Good morning.
Congratulations on this deal.
Thank you.
What's it all about?
Well, it's exciting for us. So Applied Digital, obviously one of the developers in data centers and AI factories, and has been for many, many years, actually has retained us and using us to build out the electricity to drive another data center, a plant. So as you mentioned, about 1.2 gigawatt worth of power is going to be located at this particular site. B&W provides a turnkey program to deliver that power to those particular sites. The location still to be determined, but the announcement this morning was exciting for us because we selected Siemens as the steam turbine partner to be combined with the B&W boiler set and all of the construction, installation, and environmental services we provide. So collectively together, those two companies will produce the 1.2 gigawatt to power this data center for Applied Digital.
How does this move the needle for your company?
Well, a significant contract for us. B&W has been around since 1867. Over the years, they have built power plants all over the world, coal plants, fossil fuel, natural gas, and others. A few years ago, we took the steps to actually trim a lot of international new build for us, to focus on parts and services, and to focus more in North America. Cash flows were stronger here, bonding, other capabilities, security packages were stronger here. So our intent was to focus on new build and larger projects in North America, with the advent of not only the data centers and other aspects, but the utilities side as well, who are all building new power plants and new technologies to meet baseload generation demand. So this fits within our strategy to drive forward. It's obviously a sizable contract for us, and we're very excited about the opportunity to do this. The advantage for us is that we can deliver this solution by the end of 28, where other data centers and companies that are looking at combustion turbines, combined cycle or simple cycle, the delivery dates on those turbines are in the 2031s, 32, 33. So in this particular case, Applied would be up and running, providing power to their data center customer by the end of 28. And so that's an exciting development, is that we can fit within that infrastructure, but be faster to the marketplace than other methods.
Overall, how is your firm uniquely positioned to provide the power needed to support AI and its continued build out?
Great question. So B&W, again, being around so long, but our focus is delivering power, both to the industrial and to the utility sector. So we have been in position to build out power plants for all of the utility aspect in the U.S., as well as the large industrial companies in the U.S. So our technologies, simply put, we build boilers, systems that create steam drives turbines to create electricity. So we've been doing this now, like you said, since 1867, all over the world. So large projects, small projects is something that's in our DNA. And so we are uniquely positioned because we have the turnkey technology to make this happen.
We're speaking here at the start of 2026. It's the first full trading week of the year.
Exciting.
What would make a successful 2026 for your firm?
Well, so we are excited about 2026 because the demand for our core business products and services, just the extension of coal plants in the U.S., natural gas in the U.S. So setting data centers aside for a moment, we are actually going to be increasing our EBITDA this year by 40% year over year. For 25 to 26. And that's just based on our core business and taking care of the parts and services and the wear and tear of power plants. And that's because they're being used more and more. Baseload generation demand, again, excluding data centers, is on an all-time high. Electric vehicles, new manufacturing coming back into the U.S., on and on. So that demand is causing wear and tear. So those parts and services and maintenance services we provide increases our revenues and obviously cash flows. So this year we're looking to grow our EBITDA just on our core business. And we put out an initial guidance of 70 to 85 million of EBITDA for 2026. Doesn't include anything from the data center. So as we start to implement this data center project, which we've recognized a little revenue, but not significant toward the 1.2 billion. That will happen more in 26. That will actually increase, obviously, our production on our revenue, on our EBITDA and cash flow significantly in 26, but truly it will be very significant 27 and 28. And then we have a couple other projects along the same size and lines that we're talking about with Applied that would start to happen in 27, 28, 29. So.
Talk to me about the evolution of your customer base and what that means for investors.
So from a historic basis, B&W focused a lot on the boiler aspect inside, again, utilities here in the U.S. and industrials, paper and pulp, oil and gas, and other aspects. Along with the data center revolution, which is now creating new customers. Hyperscalers are now customers. Data center developers are now customers that are happening out there. On top of that, B&W has been investing in new technology to create hydrogen, very inexpensive, low-cost hydrogen from solid fuels, but capture CO2. We've also invested in CO2 capture in other areas. So now what we're seeing is our customer base is expanding, not shifting, but expanding. So the utilities are growing for us, but at the same time, data centers, hyperscalers, and now large oil and gas companies are expanding for us as well, too, as we move more into hydrogen and alternate fuel production using some of our newer technologies.
Are you excited to ring the closing bell today?
Oh, super excited. Glad to be here.
Yeah, congratulations
Thank
again, and all the best in 2026. That's Kenny Young. He's Babcock & Wilcox's chairman and CEO. Joining me here in studio ahead of the closing bell. We'll see you back on Taking Stock, our closing bell show.
Awesome. Thank you.
Thanks again, Kenny.
Yep, thank you.
All right, well, stay with us because up next, our guest says that everything is in place for the robotics industry to soar. We'll have more on the other side.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. CES bills itself as the most powerful tech event in the world, and it is making plenty of noise in Las Vegas this week. AI remains front and center, and according to our next guest, it is benefiting the robotics industry too. Joining me now with more is Benji Barash, Roboto AI's founder and CEO. Benji, great to have you on the show this morning, joining us from the West Coast. We've seen some big announcements from some of the biggest names in technology when it comes to robotics. Is this industry finally having a real moment here?
Yeah, I really think we're getting there. I think over the last couple of decades, robotics has had a lot of false starts. But finally, as you were saying, all of the enabling technologies are in place so that we can actually get to a point now where we can deploy robots and scale them up and have big fleets, replacing some of the manual labor that's really crippled a lot of the industries for a long time.
What are you and your team building at Roboto?
Sure. So really one of the dirty secrets, I would say, of the robotics industry is that as you start scaling up a robotics fleet, these robots produce tons and tons and tons of data. And unfortunately, that data is very different to the type of tabular data that companies have been processing for a long time. Robots produce sensor data. It's very multimodal, and it comes from all the sensors that are on the robots. They might be cameras, LiDARs, radars, you name it. And so ultimately, all of this data needs to be analyzed so these companies can actually understand if their robots are working well in production. And if they're not working well, the issues might be pretty catastrophic. Imagine a drone falling out the sky or a surgical robot kind of not operating correctly on a patient. And so what Roboto is building is a data platform that helps these companies analyze robotics data specifically so they can find all the issues and edge cases ahead of time and not have their customers suffer.
What are the new AI capabilities that Roboto is announcing this month?
Sure. So we're really investing deeply in AI as well as a company. And a lot of the pain points that our current customers struggle with is still having to manually review all of this robotics data. To review robotics data, you have to be a super proficient, super smart robotics engineer, and it's really complicated to get through it all. So at Roboto, we're launching AI agentic analysis capabilities that will automatically review all of this robotics data that their robots are producing and surface all of those interesting incidents, issues, and edge cases that they might have otherwise missed and that might ultimately end up crippling their fleet if they can't discover ahead of time.
So is it the case that your company can help some robotics companies actually avoid downtime?
Yeah, downtime is a really big problem in the robotics industry, right? If you're rolling out a robotics fleet and it doesn't work all the time as you'd expect, your end customers are unhappy. You know, if the law enforcement team can't reliably go and fly their drone when they're expecting to, what's the point of having it in the first place, right? So downtime is a huge issue. At Roboto, we're really trying to help robotics companies scale up and get to that point where their fleet is really, really reliable. And so with our new agentic analysis capabilities, they can find more and more of the issues ahead of time that are going to, really jeopardize that reliability and jeopardize that uptime. So we're really excited. We've even seen, just huge improvements already with some of our current customers using this new suite of tools we've built, where their uptime has gotten a lot higher because they're not finding issues now in production during their operations.
For robotics companies that are watching Benji, what do they need to know?
I think they need to know that just because now all the enabling technologies are in place and robotics is really having a moment, as you were saying, it doesn't mean it's going to be easy for them to scale up the fleet. What we found at Amazon Robotics when we worked there was that it's pretty easy to build, robots in a lab environment now and build a few of them. But as soon as you go from a few robots to a big fleet of robots, these reliability issues start kind of coming through. And if you think about it, most robotics companies today have never operated at the kind of scale yet that they're going to need to in order to be successful businesses and have successful rollouts. And so companies need to get ahead of this data problem in their robotic fleet as early as possible. Otherwise, they're going to run into these issues in production, and it's going to be disastrous when they roll it out. So I'd encourage any robotics companies listening to get in touch with us. We can help you start automating the analysis of this robotics data as early as possible so that you don't run into issues later down the line.
Yeah. Anything that you're watching as it relates to CES, currently underway in Las Vegas?
Yeah, I'm super excited about a lot of the announcements coming out of NVIDIA specifically. I think if you just look at what NVIDIA is doing now, especially in robotics, it's fascinating, right? They are one of the main reasons why the robotics revolution is now, I would say, well and truly underway. That's because they're providing a lot of the GPU chip technology in an embedded form that is able to power a lot of the autonomy algorithms on these robots. So, of course, they're deeply invested on the hardware side and the chip side, but NVIDIA is also really investing in the software infrastructure and the software tooling that goes on the robots as well in order to give them that intelligence layer so they can actually see and understand the world and make intelligent decisions. So I'm just really impressed with the full suite of capabilities that NVIDIA is announcing. It just announced a new suite of tools for autonomous vehicle companies, really like an off-the-shelf stack that gives autonomous vehicle companies the kind of capabilities that Tesla and Waymo have been building in a proprietary way for a long time. NVIDIA is putting a lot of that stuff really out there now to be consumed by more components.
Benji Barrage, founder and CEO of Roboto AI, thanks so much for joining.
Thank you.
All right, everyone, well, stay with us because up next, we're going to take you live to the opening bell podium. Dan Ives is set to open equity markets here in just a few minutes.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
Welcome back, everyone, to NYSE Live. Just a moment here, financial services firm Wedbush is set to ring the opening bell. The company's on hand to celebrate the Dan Ives Wedbush AI Revolution ETF, which trades on NYSE Arca under the ticker symbol Ives. The fund, named after Wedbush's global head of technology research, looks to capitalize on the rapid growth of artificial intelligence by investing in companies that are in a position to lead the AI transformation. Well, unsurprisingly, this fund is composed of the biggest stocks in tech. And there is a live look at that opening bell podium as Dan Ives in the pink cap and yellow jacket is set to open equity markets. He'll join me on the trading floor for an interview later. All right, Dan Ives with Wedbush Securities up there on the opening bell podium. We'll be talking to Dan about the Ives AI ETF in just a few minutes down there on the trading floor. But let's take a look at how markets open today. We do see fractional losses across the board. Of course, Wall Street adjusting in this new year. A lot of what worked in 2025 continuing to work in 2026. That is the AI trade, that is technology names. But we're starting to see the rally broaden out. A lot of our markets guests have noted that into financial stocks, energy services as well. And certainly this morning, defense stocks on the rise, like NYSE-listed Northrop Grumman and Lockheed Martin, after President Trump did unveil a record military budget that he intends for 2027. Earlier today, blockchain-enabled financial services firm Nant Global Finance announced that the creation of a fully integrated capital markets platform combining U.S. broker capabilities, exchange operations, transfer agency services, and blockchain technology. Nant adds that the move is bolstered by a number of strategic acquisitions. Well, joining us now with more is Nant Global Finance CEO Mark Alenowitz. Mark, good morning.
Thank you for having me.
It's great to have you on the show this morning, and congratulations on this news.
Thank you. Thank you very much. We're very excited.
What more can you share about it?
Well, Nant is a convergence of several regulated entities that have come together to create a more efficient capital markets. We're not trying to replace markets, we're trying to make it better using modern technology. And what's so unique about Nant is that it's a convergence, as I mentioned, of many different firms. So we have leaders in the industry that have focused on creating pioneering new ways to raise capital using the Jobs Act. We have Dr. Patrick Soon-Shiong, who is the head and owner of the LA Times, as well as the creator of numerous, in fact, over 65 patents have come into this company around blockchain. We have Equity Stock Transfer, which is transfer agent services. We have Brian Collins, who comes from blockchain software technology services, operating a global stock exchange. And all of this comes together to create what we think will be the next market for efficiency and more security in a modern way.
We've seen a lot of press around Project Crypto. What is different about this?
Well, Project Crypto is what we've been seeing where President Trump, as well as the SEC, has gotten behind creating a new modern market in blockchain, cryptocurrency, and other areas of creating more efficiency. What we're focusing on, though, is securities. And what I mean by securities is actual securities that trade on the New York and NASDAQ. We intend to allow those to become digital securities, allowing everyday people to be able to buy traditional securities using blockchain type investment opportunities like Bitcoin and Ethereum and USDC and USDT. So this modernization is really for the capital markets. Here at the New York Stock Exchange and NASDAQ, we think the future is going to be quite exciting.
The SEC recently approved DTC for digital securities. How does that fit in to new activities?
Well, our focus is taking, as I said, national market securities. These are securities that trade on national exchanges that are called covered securities. A lot of the other groups that are out there and a lot of what people have been talking about are stable coins or meme coins or what we call mirror coins. What we're looking at is actual traditional securities and being able to allow an investor to buy digitally on the blockchain and then be able to transfer those securities right back to NASDAQ or the NYSE and to be able to trade them back and forth, giving investors better transparency, better market data, and most importantly, none of the manipulations that we see in capital markets. So again, we're not trying to change the markets, we're just trying to make it more efficient using technology.
What is next?
Well, the next step is, of course, we've got to get regulatory approval. We're working through the SEC and FINRA in order to have this come to fruition. We hope, if all goes well, will be sometime in Q2. And we're looking to continue, but the operations as it stands now, we have trading, we have transfer agent services, shareholder services, and today is the beginning of what we think is the future of capital markets.
Anything more our viewers should know, Mark?
Stay tuned, and we look forward to seeing the world change.
All right, Mark Alenowitz, he is here in studio with me, Global Finance, Nant Global Finance CEO. Mark, thanks again for joining.
Thank you for having me.
All right, everyone, we'll still take on the CEO of Domin. Says that companies simply using AI isn't enough. He'll join us to explain how his firm is helping businesses turn to AI technology. Plus, of course, AI is generating plenty of headlines at CES this week. Voice agentic platform Iola is among the companies in attendance, and its CEO told me how his platform is helping solve data dilemmas. You don't want to miss what he had to say. Later on, I'm going to head down to the trading floor where Wedbush Securities' Dan Ives and Cullen Rogers tell me how the Dan Ives Wedbush AI ETF stands out in the marketplace and how investors can leverage it. Stay with us.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. From today's opening bell to everything unfolding at CES, artificial intelligence continues to drive markets. Our next guest says that companies can't simply use AI, they must also become AI firms. Joining me now with more is Ulian Sharka, CEO of Domin, which researches and develops responsible AI for regulated industries. Ulian, welcome.
Thank you. Good morning.
Yeah, great to have you here at the Stock Exchange today. Talk to me more about what your company is doing.
So we're building foundational models and giving them to companies so that they can own them and become an AI company. We believe that this is an IP revolution, so companies will need to choose whether they give their data to somebody else or they own them. And the only way for them doing so, it's owning the models. Now, this doesn't apply for everything, but for their most precious trade secrets, it's crucial.
Mm-hmm. And how is your company going to lean into your strategy in 2026?
So our goal for 2026 is to educate the companies, the market, that AI is not about everything. AI is just a piece of the puzzle. We believe that only a small portion of AI projects are going in production, mostly because there is a communication problem. People think that AI models can do everything, and then their expectations are not being met. So we're going to invest a lot of time in showing companies how you can have middle steps and iterate through AI projects to get them done.
CES is underway in Las Vegas, the Consumer Electronics Show. Is there anything unfolding there that excites you at the moment?
I think the innovation that we're seeing with chips and how fast these supercomputers are growing to enable models become better and faster, and also enable organizations own a piece of the AI infrastructure is going to be a huge deal this year. And what I saw at CES actually gives me hopes that companies will be able to become AI companies because they're going to have the tools to do so.
What are the risks that exist when it comes to AI infrastructure?
I think it's mostly concentration, because we're putting AI infrastructure in the hands of a few, and that can literally create a gate to AI adoption. And I hope that we're going to be able to enable everyone to own a piece of it, and not just a handful of companies make these hundreds of billions of investments that potentially will not turn a profit because again, we cannot have everyone to be an AI adopter. We need to distribute and decentralize AI so that it can benefit everyone. Otherwise, we're going to have a few big monopolies and everybody else just being a user.
How is Domain connecting with clients this year?
So clients are looking for us because we have built some great case studies with customers over the past few years, where we made this bet that we should enable them to have this adoption differently. So think of data security and data readiness first. There is a systems integration challenge that we help customers solve before they bring AI into production to make it safer. And only then we deploy agents in use cases that are prioritized based on business goals, and not just for the sake of AI. And the word of mouth is actually helping us a lot. Customers are getting to us actually in financial services, which is our main domain and sweet spot. We have more demand that we can manage, so we're raising money to actually keep up with it.
You're partnering with NVIDIA. What more can you share on that front?
So we're building one of the largest AI supercomputers in Europe, and we plan to continue doing so across Europe and also in the US. NVIDIA is such a great company because they are enabling, unicorns like us to dream of 100 billion in market cap, but potentially why not over the long term even in 1 trillion. So have only good things to say about NVIDIA and how they're thinking of building a open platform and enabling everyone to actually play the game.
Where can this partnership go from here with NVIDIA?
I think what NVIDIA is doing is going beyond chips, investing a lot in software. Jensen and his team have been brilliant in actually open sourcing these models and enabling actually the market to access AI not just as a user but also as a creator. So we're looking forward to develop more models with them where we create domain expertise. So we bring together foundational capabilities and domain expertise to accelerate the readiness of AI in specific mission-critical environments. For example, this year we aim to extend our market reach beyond financial services into defense, government, and advanced manufacturing.
Anything more you'd like to share for our viewers, Ulan?
So I think we're living in a sort of a reality distortion with AI because AI is such a powerful tool. I mean, finally we have people talking to machines. We can close the digital divide, we can close the digital skills gap. But we should not glorify AI as a digital god. We should be more realistic. I like to think of AI as a good electrical car rather than a flying car. It is going to be a flying car, but it's going to take time. So we need to be very honest in communication because this tool is going to change, the market forever, positively speaking, but we need to be very honest about its capabilities and the path forward to profitability.
Ulan Sharka, CEO of Domain, joining me here in studio at the New York Stock Exchange. Thank you again.
Thank you.
Well, AI is a central theme at CES 2026, which has been making headlines across the tech sector throughout the week. Voice agentic platform Aola is among the companies participating at the event. And this past fall, I had the chance to sit down with its co-founder and president, Amir Haramati, who explained how speech is solving data-related challenges. Let's take a look.
At the end of the day, we're not trying to build technology for technology's sake. This is my 6th startup I'm involved with, and I don't like to call myself serial entrepreneur. I think that word has been washed down. I like to define myself as a serial problem solver. So it's about really real problem that make a difference, move the needle, and make an impact. And with everything that happened with AI in the last decade, which is incredible, I think we get a bit confused because AI tools are amazing, but despite the fact that AI, they're still just tools. And then we realize the biggest challenge is data. And that's the reason we realize there's a huge opportunity to solve the data problem by voice.
Why is voice the most natural and powerful interface for human to machine interaction?
It's a great question. Speech or voice by far is the fastest way to get information. It's 3 times faster than anything else. It's in 1/3 of the time you're actually capturing 3x amount of data. One day, God willing, your grandkid is going to find a keyboard in your garage, and you're going to say, "Grandma Kristen, what is this?" And you're going to struggle to explain that was the most creative way to communicate with machine by punching buttons, okay? So it's super clear that this is heading, but it's very challenging. So the question is super clear. The implementation is much more complicated.
Why are frontline manual processes the ideal proving ground for voice agentic transformation?
It's a great question, and actually it's even, if I may, a bigger question, because at the end of the day, one of the struggles right now, or the complaints about the AI bubble, is the fact the cost of AI is so expensive and it's very difficult to retrieve and show ROI. Therefore, we believe, my mother always told me, you have 2 ears and 1 mouth. Try to keep that proportion. And at the end of the day, it's incredible what you're able to hear if you're willing to listen. So the key there is to go after the traditional enterprises that have many processes in place. And we believe that by doing that by speech, actually is going to make instant impact in ROI and will create data that previously was uncaptured and unstructured. So rather than build a technology that organization will have to adjust to, is to build a technology that here to adjust to the existing processes. And we're talking, Christine, about 2 billion frontline employees that this is applicable to.
Wow. What makes voice recognition challenging?
The concept is clear. I think we all agree on that, and everybody understands it's all about data, but a combination of languages, accents, acoustic environment, and above all, we learned that in every industry, in every company, in every location, there's a very specific jargon. Hence, it's very difficult in those settings to get to accuracy, which is good enough. So one, how you can do it in accuracy that close to 100% in any language, accent, acoustic environment, or jargon. And we did it in a very unique and proprietary and patented way, but even then it's not enough. Because now we have great transcription, but how we separate the noise from the signal? How can we extract only what's relevant? So we built another technology which is called keyword spotting that separates the noise from the signal, but even that is not good enough because at the end of the day, it's not speech to text as we know it. It's actually speech as highly unstructured data to highly structured data. So speech to data, speech to schema, speech to workflow, which is very difficult. And in a very honest and very modest way, we were able to do it.
Give us a reality check when it comes to enterprise AI adoption.
That's incredible. 3 months ago, MIT released, for us at least not surprising, but very important research that showed that 95% of AI pilots and enterprises fail to show value in ROI. So at the end of the day, that's a very harsh reality that it's all about return of investment. And the key there is it's democratizing. I'll give you an example. We're working with a supermarket chain in Canada. French-Canadian is a very challenging language. Background noise at a supermarket is very difficult. They have to do a critical process of checking the temperature of the meat inside a refrigerator on a daily basis. By doing that by speech, we saved them 110,000 hours that went directly to EBITDA. So it's a direct line of sight, direct ROI. And we're talking about groceries, a 2% margin industry. Frank Sinatra sang about New York, if I can make it here, I can make it anywhere. And I say, if I can do it with a 2% margin industry and show 5x ROI, but we didn't stop there. We're going for one of the largest pharmaceutical companies, where we, less than half time needed for maintenance report, we tripled the amount of data. Then we took it to one of the largest jewelry manufacturer in China, doing QA inspection of pieces of jewelry, a process that takes about 180 seconds. So they look and then have to write a report. Now they're looking and talking in Mandarin, by the way, which is a very challenging language. And from 180 seconds, we went down to less than 30 seconds. So everything we do, last night, we're working right now with one of the largest rental car companies in the world that we found out we can save them $2 million per site just by capturing the information faster by speech, getting the information on structured data, connect the dots beyond what human eye can see and get the brain to think beyond, and connect dots beyond what the human brain can process, but get you things that you never thought was feasible even to get.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
Nice, clean solo shot.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live, everyone. We are down here on the trading floor of the New York Stock Exchange. You saw the opening bell earlier, 9:30 a.m. Eastern. Wedbush opening the equity markets to celebrate the Dan Ives Wedbush AI Revolution ETF. Well, joining me now with more, Dan Ives. He's Managing Director and Global Head of Technology Research at Wedbush Securities, and Cullen Rogers, CIO of Wedbush Fund Advisors and Portfolio Manager of the Ives ETF. Gentlemen, welcome.
Great to be here.
Yeah,
Great
to have you indeed. Let's talk about AI. Dan, what is in focus for AI right now?
I mean, I think we just came back from CES, physical AI in terms of autonomous robotics. I think that's front and center. Look, this AI revolution, it's just the next stage of growth. It speaks to everything we're doing with the ETF, who the winners are. And as we've said, this is third inning, one out in terms of where we are in the 9-inning game.
So we still have more to go in the cycle. How long is it going to take to get to the 9th inning?
I mean, I believe we have a bull market in the next 2 years. We've talked about 10:30 p.m. and that party that goes to 4 a.m. And I think what we're seeing now is that the next stage of AI monetization is playing out. You know, we've seen it in Asia, demand the supply for NVIDIA chips 12-1. And anyone that came out of CES, hearing the godfather of AI, Jensen, NVIDIA, it just shows we are still in the early days, and that's what we're so exciting about, you know, in terms of everything that we're seeing on AI.
I want to talk to you, Cullen, here as portfolio manager of this particular fund. What makes it stand out in the space?
Well, I think when you look at this guy right here, there's nobody better in the world as a tech analyst, and we've constructed this product to be basically an investable vehicle of his research, and I think that's the big differentiating factor. You have other ETFs that are using stale classification schemes, and then you've got Dan that's setting the bar, and I think that's what really sets it apart. This space is moving so fast that you really have to have a finger to the pulse, and nobody has a better finger to the pulse than Dan Ives.
Yeah. What is the use case for this fund?
I think when investors sit back and look at what's going on in the economy, the incredible capex that we're seeing that Dan talks about all the time, you have to think about AI. It's the tip of the spear of the tech movement, and tech is the tip of the spear of the economy. So I think when you think about constructing portfolios, you have to be thinking about how to embed AI in your portfolio judiciously. I don't think you can get out over your skis, but I think everybody needs to think about some exposure to AI. And I think we've constructed the best vehicle to do that because it's broad ecosystem access.
Dan, you're no stranger to Wall Street. Everyone knows you, frequent guest on CNBC, of course, and a community that just embraces you when you come down here. What does it mean to be up there ringing the opening bell?
Look, I mean, my whole career has been spent here at the New York Stock Exchange, and I think the history, it's really the center of capitalism, and that's why for me to ring the Ives, you know, and the AI revolution, all those success, and ring the bell, it's a historic moment, not just to be here, but to me, it really represents everything that I sort of view that where the market's going, AI, the excitement, and to be here with colleagues, because it's not just me. It doesn't happen without Cullen, without the Wedbush team.
Yeah. Cullen, I want to go to you now. What else is in store for Wedbush funds this year in 2026?
Well, it's been an incredible start. You know, we started this 1 year ago, and our first fund has been such a huge success, so it really sets the table for us. We've got a lot in the pipeline. We're going to have multiple fund launches in the next 3 or 4 months. There will be more Ives-related products coming out. We're still in the quiet period, so I can't get into extreme detail, but we've got really cool products coming out. The whole point of what we're trying to do is launch differentiated products. We don't want to do the same thing. We don't want to reinvent the wheel. We want to come at it from unique positions and unique views on the market so that investors get more arrows in their quiver to use in client portfolios, and that's what we're going to try to do, and that's what we're going to do this year.
Dan, is more swag in the pipeline for 2026? I'm taking a look at this nice pink hat with the Ives ETF name on there.
Yeah, I have my collab with Snow Milk in Brooklyn. We have our shirts, danivesclothing.com. We're coming out with a Dan Ives Clothing sports jacket. Look out for that in the next month. Look, it's all just about, it's not just having fun, but it's something where I'm excited to just bring a little color into Wall Street. My goal is when we're here for our next fund launch, that this guy Cullen be wearing a pink jacket.
Cullen, are you on board with that?
It's very hard to compete with this guy, but if we do it again, I'll wear a pink jacket.
Yeah.
Cullen Rogers in pink down here on the floor of the New York Stock Exchange alongside Dan Ives. I like that very much. Earnings season, Dan, is going to kick off soon, within about a week or so. The banks are always first to report, but when these technology names report, what are you going to be watching from them as it relates to AI?
I think it's about CapEx. I mean, we think we're going to have 550, 600 billion of CapEx from big tech. And that's why we're going to have a tech earnings season that I think continues to wow. I think Street's underestimating growth 10 to 15% this year. It speaks to our view. You get the popcorn out, the AI revolution's just starting.
And how often are you making changes to the holdings of this portfolio, Cullen?
Well, so the portfolio is very unique. It's based off of the research of Dan Ives. So when Dan changes his AI 30 research report, the portfolio changes. And I think that's maybe the most unique element of this index-based product is that when pivots, when seismic changes happen in AI, nobody's better than Dan Ives at identifying those, enveloping them in the index, and then the portfolio changes are made immediately. So it changes as needed based on how Dan sees the market.
Very dynamic, as always. We would expect nothing less. Dan Ives with Wedbush Securities, Cullen Rogers with Wedbush Funds. Gentlemen, thanks again and congratulations.
Thank you very much.
Great to have you. All right, everyone. Well, that just about does it for our show on NYSE Live this morning. We're just about 30 minutes into the start of trade. We do see a mixed market. The Dow has turned higher, up by about 0.1%. The S&P down just 0.1%. So little change collectively for the major indices on the big board right now. A reminder to our viewers, we're in the first full trading week of 2026. You can catch us each weekday morning from 9 to 10 a.m. Eastern on all the streaming services that you see on your screen right there. We're going to be continuing to cover major themes driving this market like AI, technology, as Dan was describing a little bit earlier, robotics, autonomy, all in focus. And of course, the NYSE does have a presence on the ground at CES 2026, currently underway in Las Vegas. We'll have more of that content rolling out in the coming days and another show tomorrow with the jobs report on tap. Thank you for watching. As always, we'll see you back here Friday morning, and have a great day.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?